All right, so today I'm going to just do some quick analysis and also show the point figure chart and how nice it is. One nice approach that you can add it to your arsenal. The point and figure chart, Wyckoff used it for two things, at least two things, besides the obvious. I mean, the obvious is that it has good support and resistance, right? It shows lines of support and resistance, which is what you use for the other thing that it's used for, which is the count, which gives targets. So it has lines of support and resistance that are quite clearer than a bar chart and many other types of charts. And those lines of support and resistance are then used to create a count which projects targets. And the other thing with the point figure charts is it takes out a lot of patterns. So the only thing you're looking at is highs and lows, support and resistance, break, high, low, support, resistance, and then the count across the lines. So that's what makes it important in a time when there is, well, in times like today's markets where people are fooled by randomness on intraday charts, or fooled by just false moves and this and that and patterns, right? So the beauty of point figure is that in any chart is its ability to accurately convey the message to you. And point figure, because it's not focused on patterns, it is just showing you high, low, support, resistance, and bases, right? So anyway, first let's take a look at the ES. ES yesterday was a reversal. So why I think it's important is because this has a base. This sideways action based out for a pretty big move. I mean, if you take a look at these breaks, these are very clear breaks, and they're quite large. So we'll see what the point figure target is in a minute. The market went up to 4226, so you had this rally, base, rally, break, right? What are the levels? So now we chop the daily up into Renko and see where the levels are. Level here, here, and here. I can't really use this anymore because it's been taken out. So let's take out the daily resistance. All right. So the support level is 4170. That's where market just blew through it. I mean, market did whatever it did and built volume there and blew through it. And the other one is 4140. So I mean, it didn't test. I thought it was going to pull back and test here, but it's too strong. So we'll see if how this is handled on the pullback, because this is basically break and test setup right here, supported with heavy volume. So this is the high, this is the break, this is the follow through, which is very good follow through. So the break and test should work, because it has volume, it has a base in the background, it has follow through, all three things you need for a break and test type of setup. It has stuck shorts. You could tell by the wick. They went try to sell it against the resistance area. They tried to sell the resistance and they failed. That's what created the wicks under these Renkos. So it has all the makings of a good pullback trade. Anyway, so on the low time frame, went up, short on the thrust, pull back to test, and rally, right? Initially there was a change in behavior here, then there was this selling which sprung these lows, and then it went up. So this is what happens, right? So that's why you can't just use the low time frame chart. The low time frame chart in isolation is the worst thing you can do, is quote unquote read the chart. Believe me, this is the worst thing you can do. And if this is what you're doing, this is what's holding you back, because the lower time frames are a dumping ground for orders. Right? All right, now let's move on to let's see where this thing projects. All right, so I'm just looking at the base here. All right, so I'm just taking the base. All right, just where am I? I think I should take it from here. So what's the minimum base? Would be probably. So we'll take a look at the stepping stone count and see what it projects. So this actually is going quite back. So just those 1, 2, 3, 4, 5, 6, 7 days, right? So it will be right there. All right. I think that's it. So if I only take that, I mean, it's only 7 times 25. So the effect is 41. Actually, it's 4,300. I mean, it's projecting 4,300, and that's not too far off. I mean, that's really I'm taking quite conservative. I'm only taking the consolidation, nothing more than that. I haven't even taken the whole base. If I take the whole base, it would be probably 25 or 35% higher. And if I take the whole base all the way back here, it would be significantly higher. So I'm just taking this piece, and it's going to that area, 4,300. So that really should be like the minimum target. All right. But yeah, I mean, this thing has a much bigger base. I mean, technically, you could take it all the way back here. You could take it at least back here, at least. All right. So, for example, this would be, the other one would be 10. So 7 projects here. Where the hell is 10 projects? It's about 40, right under 4,400. So 4,300 to 4,400 easily, like that would be your zone. And that really makes sense, because if you take a look at the entire base, let's take a look at the entire base from not the stepping stone count, but the entire count. All right, so entire count is 7, 8, 9, 10. That's 20. All right, so what's the effect? I mean, yeah, it's projecting 4,400. It's projecting 4,400, folks. So 4,300 to 44. I mean, the minimum should be 43, but the base is consistent with the stepping stone count. Let's get rid of the middle counts, the other stepping stone count, which, by the way, worked. Surprisingly, I don't know. Sometimes they just work. I don't know what to say. All right. So this is I'll take it from here. There we go. 4,400. A little picky. Anyway, what did I do? Okay, so 4,400 base projects 4,400. Stepping stone count also projects. Get rid of this. These little counts, I wanted to keep it simple, right? So usually I think I'm going to start using point figure a little bit more because I see value in it. Oh shit. Let's just keep it as simple as possible. So we'll just take this entire base right here. So that's 10. And its effect, 54. Oof. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yes, 43.75. Anyway, so it's basically 43.75, 4,400. That's the target. According to this, according to the count, right, from the base, and as well as just this key piece of the stepping stone, 4,400. And that's how I do it. All right. So let's put this away. Where do I put this? Yeah. All right. One second. All right. So now, what does that mean? That means you got to buy pullbacks. That's what I'm doing. All right. So the pullback I'm trying to get here, which would be 41.70-ish, right? And it pulls back here, which it will. It should pull back and offer the entry at 41.70. And it's very nice because you know why it's nice? You have a very nice stop. If you get around 41.70-ish or 41.73 or whatever, right? The stop could be right under these lows because they don't. This is a spike, kind of like a low right here. So this 41.60 could be the stop, right under the profile, right under the wick here, and your entry there, and your very good upside target. Anyway, all right. What else? So the other thing I want to do is use. Now this is something you will not see done at all, and that is the intraday minor point and figure. Now, in general, I do not recommend playing around with this intraday point figure because you can get really confused, right? If you have too many charts. But one thing that is good for is actually just like other charts. It's good for the change of behavior and seeing a little bit of clarity. But it's not, again, it's not something I'm recommending. Right? So we see that the market was pulling back, right? So where is the climax? The climax is right here. Okay, the bottom indicator is volume, and the top indicator is price. But the way I'm doing it is it's the biggest volume in 100 bars, or the biggest price range in 100 bars. So I'm using a statistic and not the actual value, but it's the same. Actually, I think it's a better way of reading because it quantifies relative to historical data. So, and it's factual. It's not like an interpretation. So you could say that this is the biggest volume in the last 10 waves, or this is the biggest volume in the last 10 bars. Right? It's a very good way of reading the price volume charts. Anyway, so this is your climax, right here. And what happened, it went sideways, and what you'll notice is here's the pickup in volume, in price. This bar here, was the biggest in 18 bars. After that, it was going right here is the biggest in 26 bars. So you can consider that your change of behavior. Biggest in 18. Right, that's all the way back here, right? It's the biggest. You could also see the pullback, hold, right there, rallying with volume. So there is strength right there. And finally, it just boom, breaks through. So the indication, if you're short, where do you consider getting out? for sure, when this thing came down on the climactic movement, it's time to take profit because it's coming back and hitting this low, this zone or support or whatever you want to call it, zone or whatever. Time to get out, right? Time to get out, especially if it doesn't break through and then bounces. Guys, it's time to get out. So you have like a little zone here, boom, climax, pick it up, and then eventually pick up some more volume, biggest in 26, and it keeps on going. Here was a little confusing because after it did all of that, it had a heavy selling wave right here, which, you know, looked like a change of behavior, but it was a shakeout. What happened? Anyway, it messed up. Fix this later. Shakeout right there. That's the shakeout. Okay, that heavy volume. All right, now we keep on going. Volume pressure, price volume pressure is consolidating. Get rid of all of this. All right. So, give me 1 second. I fixed the thing there. Now I can write shakeout, and it won't move. Okay, good. All right, shakeout. Then it does this, boom, boom, and right here, volume picks up. See that? No, not volume. Price. I mean, there's a little pickup in volume, but it's more. Price is more notable right here. Price picks up. So that is your reversal, meaning it's ready to go. Why? Because it came from a spring and it totally rejected. All right, so it tested these lows, right? The zone or whatever you want to call it, support, tap, and then bang. And now we are seeing more and more price volume increases. So do you short? Fuck no. Okay. All right. I mean, imagine if this much volume did a shakeout and it could not have follow through and break. There's no red evidence, big red, no big reds. So answer is no. I mean, look what they did. This thing, shakeout, boom, bought it. Should have got the pullback, set it up and go. Okay. So this is one approach to reading what is any chart, it doesn't matter. You can here I just put it on point figure, but basically just quantifying supply and demand using two characteristics, price and volume, and using a simple comparison. All right, like how big is the volume? This is the biggest volume in 100 bars. How big is the bar? Is the biggest bar in 100 bars? So you're taking the volume and the range and just turning it into a statistic, which gives you a much easy way of reading price and volume and quantifying it. That's the key, quantifying it so it sticks out and gives you the strength of supply and demand. This is how you do it. And also note that, yeah, Wyckoff did use this type of thinking. If you read his course, he would say, oh, this is the biggest bar in this many bars, and this is the most volume in the last 20 or since the downtrend, etc. It's all over his course. You take the raw data, read it, and interpret it, and compare it to prior days and prior bars. Okay, but this excellent way you can apply this to bar charts, whatever, bar charts, figure charts. It's a common sense way of doing it. All right, so this area was really nice to get long, and market went down here. But if you just look at the bar chart, you're not going to see it. You know why? The bar chart will show selling and this and that, but the point and figure chart give you clarity. Why? You have a rally and pull back to support. That's why these charts need to be used in a way that makes sense. You know, if you just Some individuals can do it, but I think it gave so much clarity. If I was just looking at the bar chart, I would say, oh, look, there's a shortening of the thrust, the biggest selling wave in a lot of waves. Maybe it's a short. But the point figure chart said, hell no. Why? Too much of a base. Base, breakout, pull back to test the base or the breakout. Bullish, cause, boom. Any selling here? No. Any red? No. Last time there was a red, what happened? They absorbed. Pop. So what happens? If it comes back down to these areas, it'll probably cover, causing additional buying to create a rally. So this is why I wasn't too much of a fan of PNF intraday, but now I do see a value in it, and I know how to put it into the process of trading. Anyway, so let's see, where the hell else am I? Okay, next market.